Welcome to the Sykes & Company PA video blog.
Essentially, the big box contract is going to typically list what they're going to buy specifically. For example, inventory with specific inventory instructions. And herein, you've got to be extraordinarily careful about what those inventory structures say or do not say, because it's not just buying all your inventory across the board, lock, stock, and barrel, both script and OTC. So beware. It's very specific about what they're buying versus what they're not buying. Prescription files. Typically, obviously, this is the mainstay of the contract, where they're buying all prescription files and records, data utilized in your script management system for a particular certain price. And again, the price sometimes can be low or high depending on how bad the big box entity wants to own your store and or location. So with the purchase of the script files, goodwill is typically automatically included at no additional cost in most transactions for the business. And of course, in these contracts, these buyers never assume any liabilities that you may have, including wholesale bills and any other outstanding obligations you may have. They obviously are going to want immediate access to all your data and information to do their due diligence. They're going to want your telephone numbers, your names, all your third party, probably in some cases social media information, and they are going to provide to you a covenant not to compete, because they don't want you competing against them should they purchase the majority of your assets in your business. They don't want you competing against them for some certain period of time. Sometimes it's 3 years, sometimes it's 5 years, sometimes it's shorter. And those kinds of things sometimes can be negotiated. And frankly, sometimes part and parcel of that are key non-compete agreements for maybe a PIC you may have or some key technicians that you may have. And sometimes that gets to be very problematic because, what's the reason that an employee who maybe doesn't have a contract would be signing a non-compete other than to help you complete make you to allow you to consummate a sale? And without a contract they have, that may be problematic within itself. Of course, when the purchase of the script files, there's typically going to be a holdback amount. So at closing, whatever you receive for your inventory, again, post the details of the instructions of what they're buying versus what they're not buying. They're going to pay you X dollars or X percent maybe of your prescription files and hold back monies for certain periods of time, maybe a year or longer, maybe 6 months, and maybe require you to prove your script volume after some specified period of time, say 6 months. And if you don't generate X volume that may be shown and structured in the contract, then the holdback would be charged again. So what we typically have seen is what appears on the front end to sometimes be a number that's sometimes too good to be true, that once adjusted for the clawbacks and the adjustments that the big box retailers will have in these contracts, the deals simply are not as good as you may think. Also, they typically are not going to be hiring your employees. They're going to be leaving you with your land and building in most cases, probably closing the existing store, leaving you with inventory that they're not buying, and all those issues are things that you have to consider. Notwithstanding are the tax effects that you have to consider, because essentially, in some cases, this is probably going to be treated as an installment sale with both capital gain and ordinary income components, the ordinary income being the covenant not to compete. But these are the kinds of things that your advisors need to assist you with. But please get your advisors involved in these contracts if you ever accept one of these contracts on the front end.
Thank you for watching. If you enjoyed the video, we invite you to subscribe to our YouTube channel.